Several stocks rose today after activist investors spoke about them at CNBC's Delivering Alpha conference, presented in conjunction with Institutional Investor. Starboard's Jeffrey Smith said shares of Macy's are worth nearly double their current value. Sandell Asset Management spoke about opportunities in Ethan Allen, and shares of American Realty Capital Properties rose after Keith Meister of Corvex Asset Management identified it as one of his best ideas for 2015. Tyler Matheson reports from that event, which was a who's who of investing and finance.
Thanks very much. Today at the 5th Annual Delivering Alpha Conference in New York City, a joint venture of CNBC and Institutional Investor, some of the best and brightest minds from the worlds of hedge funds and pension funds came together to share their top insights and ideas. Maybe no one was listened to more closely on this day that Janet Yellen testified on Capitol Hill than Jeffrey Gundlach, the man many are now calling the new bond king. He made the case, among other things, that interest rates won't go up this year, in part because he thinks the Fed's view of the economy has been too rosy.
Every year it's the same thing. It's the triumph of hope over experience, just like a second marriage, you know? So they basically say we're hoping for high growth, and they have to revise it down, so that now the most recent expectation for 2015 is the lowest it's ever been. And even more interesting than that is it's lower than the forecast ever was and what the actual was for 2013 and 2014. I just think that the setup isn't going to really play out for a rate hike.
Gundlach also argued, contrary to what Fed Chairman Yellen has been saying, that if and when rates do go up, they will indeed start to move up very gradually, but then that pace of rate hikes may quicken. Nelson Peltz, the activist investor, was joined on stage by Bill Ackman, another activist investor. They had plenty to say, but one of the most interesting points they made was why activists like them don't like to invest in tech companies. Take a listen.
And the problem with technology is most technology companies are too dynamic. I mean, you wake up and there's a couple guys in a garage, a block from Stanford University, a couple women in a garage, and they're starting a new business that's disruptive. And I think, you know, if you look at the kind of businesses that I think both of us like, we like businesses that can withstand the test of time, technology, commodity. I mean, I try to stay away from things where an extrinsic factor I can't control, whether it's commodity prices, interest rates, doesn't have a material
impact. We like businesses, and I think speaks to Bill as well, that sort of have moats around them. Okay. And technology is one that isn't.
All in all, a fascinating day here at Delivering Alpha. Back to you.